thought that was kind of interesting. I think maybe this will become a more popular topic, that more people are going to be interested in it as time goes on, and it will become less of sort of an outlier and more of something that's just the norm. But let's go ahead and hear from Kacie. Take it away, Kacie.
All right. Well, thank you so much. I appreciate you teeing me up so beautifully, because that's pretty much the summary. So we're all done here today. You can get back to your lives. But in all seriousness, I do not have 2 hours worth of material. I do want to kind of lay the groundwork of the basics on what sustainable investing is. But I also, if anybody was in this presentation about 1.5 years ago, I don't want to give the exact same materials. And as sustainable investing has become a much more media-driven element, as we have actually experienced negative market returns this year, then the situation's kind of changed since I think it was May of 21 that we last spoke about this. And so I want to talk a little bit about what that means in the actual funds themselves, in the investment universe, and like as personal investors, what we're experiencing. So please do speak up if you have any questions. Throw anything into the chat if you want me to like really focus on something. And then, like Lori was saying, I am a fee-only financial planner. I am more than happy to provide complimentary introductions to any of these materials, same as Sarah does. But of course, none of this is actual financial advice. I do not have any particular recommendations. That's not what we do in our firm or in our industry at all. And so it's certainly not what I'm trying to do today. So we never do say, you know, buy Pepsi, not Coke. It's just not the way we work. Okay. So I'm going to try and share my screen, always the first step to virtual meetings. So let's just hope that that worked. How's that feel? Everybody seeing a butterfly? Nod if you see a butterfly.
I think we are recording.
Wonderful.
So as I mentioned, Kacie's.
I'm sorry, who am I not here? I'm not hearing anyone. Was someone speaking?
Sarah, were you speaking?
Sorry, I think I pulled up your video from last time and it just started playing. So now I'm officially muted and you can start, Kacie.
Okay, no worries, no worries. Okay, so let me get back in here. Wonderful. So what's the deal with sustainable investing, right? So if I did it right, the screen share should have switched to my much fancier headshot with professional airbrushing. I am a certified financial planner, a certified investment management analyst, a fee-only wealth manager. I do run portfolios with both standard investments and sustainable investments, so I can certainly speak to the quantitative methods behind both of those. But I do have a soft spot for the sustainable funds. I live in South Austin. I am a Wheatsville co-op member. Like, I love the trees, right? Okay. So the beginning here, I want to just start with a brief history lesson. Sustainable investing, or ESG investing, or social consciousness investing, social responsibility, lots of different names. The beginnings and the history of it, they go way back, right? So if you look in some of our most foundational documents, you will see the idea of interest on loans being a controversial topic, right? Like, are you profiting at the expense or the negative life events of your neighbors? Which is a really interesting ethical, moral question from our oldest days. So later on, as pooled investments became a more common thing, as we had standardized currencies, you would see certain individuals or certain groups doing what we now call screens on their investments. You know, for example, the Quakers and the Methodists would not invest in any kind of slave-based industries, for example. Sharia beliefs about not investing in alcohol, or I believe to this day, not using interest on loans, things like that. And then coming into the modern world during the civil rights movement and during the mid-century kind of upheaval of everything here in the US, we had some really neat advancements with the civil rights, the community development financial institutions, the CDFIs, bringing banking to underserved communities. That is still a really interesting place to invest in. Lots of good work being done there. Ralph Nader, which we all remember, the seatbelt guy, the guy who, ran for president so many times. He was one of the first people to kind of use shareholder proxies to get in front of these companies and try and make them do the right things. In the beginning, he totally failed at that, but it was a snowball effect. And that's one of the topics that I want to kind of bring not only to just like today's discussion, but to everybody's thoughts about investing your values is you may not get results from minute one, but are you comfortable with that compromise if you really care about a particular topic, right? And then in the 80s, the socially responsible funds, became a little more accessible, simply as a function of the fact that mutual funds themselves became more accessible. Vanguard funds were invented, what was it, Sarah, like 1972, something like that? And so the idea of pooled mutual funds was not generally available to the average consumer until roughly the 80s. And from minute one, you've got people doing the right thing there. You've got Calvert, Parnassus, people with really long track records in this space. And some of their work is based on things like Amy Dominy. So Amy Dominy was a stockbroker in the 80s, just a regular old, blue shirt, white collar, Gordon Gekko type stockbroker. But she worked with a lot of people who cared about this kind of thing. And she did the deep dive research to find individual companies that she felt had a more sustainable outlook. And she created what became the Dominy Social Index. So to this day, there are 400 companies. They are just your regular old S&P 500 companies, but just with a little bit of a screen to reduce some of those like negative elements that we don't necessarily want to see in every investment. And so this is really interesting because it gives a nice long track record of an index just like the S&P 500. So let me pause for a second there. And go back to everybody's faces. Does anybody want to talk? Do we want to talk for a second about what indexes measure? Is everybody good? Raise your hand if you want that. No, we're good. Okay. Betsy is speaking for everybody today. So thank you, Betsy. Okay, so everybody knows how indexes work. We're going to skip it. But the thing is that how do we define that sustainable investing? And this is the hardest part because like we said, there's 7 different names. Everybody has their own metrics. There's even 3 different letters. Like everything about this makes it extremely murky. And that is one of the biggest problems that I would say investable universe itself is experiencing right now, because as it gets all of this attention, you're getting a lot of backlash. Has anybody seen this material about Glenn Hager, the Texas Comptroller? Okay. So Glenn Hager, the Texas Comptroller, has tried to make a name for himself by putting together a commission to investigate companies that are anti-Texas by not supporting oil and gas and essentially banning the funds themselves, but also the companies who put out the funds from being able to do business with the state of Texas, whether that's with pensions or any other departments in the state of Texas. So he's trying to block companies like BlackRock and Vanguard from even doing business with the state of Texas, which is not going great because there's not a lot of other options. So as he is doing a lot of his research, he has even been quoted as saying like, well, at some point we have to limit what we're looking at because otherwise there's nothing to invest in. So it's very interesting, and it's getting some coverage because there is a good point there. If you are simply a person with a state pension, did you actively choose to have ESG investments? Not necessarily. But alternatively, on the other hand, did you actively choose to invest in whatever the defined benefit portfolio manager is choosing? No, you didn't. You're just trying to get the best profits, right? And so that's one of the things that I think is really interesting in the industry. It may not be top of the statesman every week, but I want to see exactly how this shakes out. And in the Wall Street Journal, there was just an article this week about the performance of the California pension, which is one of the biggest players in the ESG space. So it's really, really interesting. Oh yes, thank you, Gwen. That's a good piece kind of about the commission that he's put together and their findings, and if those findings are actually applicable. So, okay. One of the things that I think about here too, as much as there might be controversy about sustainable investing, you guys, modern portfolio theory, which is like the basis of all fund research, has only been around since 1952. And to this day, people are constantly questioning it and refining it. So I don't think the fact that there is controversy or disagreement is a deal breaker on using sustainability metrics as one of the research pieces for your fund choices. And I think that this is something that we're going to get into here in a second, but that level of commitment to sustainability is a very personal choice, which of course takes us back to the pension thing. But anyway, so what does it even mean, right? So environmental is, in my opinion, by far the most defined and easiest portion of this ESG combination. So it's things like climate change, it's preserving natural resources, reducing pollution. I mean, as you just read those three names, it's so much easier to understand and define and create metrics, measurable metrics for than social and governance. Social and governance do overlap a little bit. Generally, social is going to be a little bit more about all of the people impacted by a particular fund or a particular company. The governance is going to be more about the company itself. Who's on their board? Do people get paid the same based on, regardless of gender and race? What are their business ethics with hiring and firing? What are their interactions with unions? Things along these lines. That's all going to be governance. Social is going to be more like, are they helping humanity kind of stuff? Or at least that's how I would put it. Does anybody have any questions or any additions to kind of hoping to clarify those issues? Anybody have anything there they want to throw out? Okay, well, we'll keep going then. Okay, so like I said, at the end of the day, it's how you personally define all of this. What metrics matter the most to you? Are you happy when you are doing your fund research? And I say fund research because I'm not a big investor in individual stocks. And for people who are, that's great. This is just replace the word fund with stock. But are you happy with the transparency of the reporting that you're receiving? And are you willing to pay a little extra if you want to see some shareholder proxy voting or, some investment in maybe an industry that's brand new, things along those lines, right? Okay, so some fun statistics. The ESG investable universe has grown by 500% in the last 10 years. And like Lori was saying earlier, in the last 5 years, 300% of that is what's happened. So the universe itself is getting bigger and bigger and bigger. You can see that there is a difference between the passive portion and the active portion. And I'm going to get into that a little bit because in my opinion, it's just like anything else. When you're a beginning investor, passive is like the shallow end of the pool. I think that's a wonderful place to start. You don't necessarily even have to go any deeper if you don't want to. But when you move forward into the active types of funds, not only are the managers trading more frequently or trying to beat the market in general, but also the thing that I think is the biggest difference there is the governance of the fund. Are they interacting with the companies that they hold? What kind of screens are they using to hold those companies? So it may not be, just the social index 400 or, that type of version, but let's say everything that's healthcare focused or whatever you might want to invest in. If you're choosing more of an actively managed sustainable fund, it's also going to be measuring all of those companies for their ESG components. Okay. And this of course can lead to some issues, but so why does it matter that the universe itself, the investable options, is growing? Well, of course, it's because, first of all, it reflects actual interest in the space. But whenever there's new issues, that means there's new options for all of us who are investing. And then, of course, it creates an opportunity. Again, I'm focusing on funds here, but for those who are invested earlier, you're going to enjoy some of that fund appreciation that's simply caused by increased volume in the fund. Not that that's a reason all by itself to ever invest in anything, but if you have a strong commitment to a particular topic, this is one of the added benefits. And lastly, when we vote with our dollars, we're showing people what we care about, and we are pushing the needle on that transparency of reporting by the fund managers. Okay. So one of the things that we may be indoctrinated to is the assumption that your sustainable portfolio will underperform your standard portfolio. Does anybody kind of think that from minute one, or that's just like your generalized knowledge that there's going to be a trade-off? Well, the math says that's not true. So when I was updating this presentation and I was looking at last year and a half ago, May of 21, the portfolios were, the KLD was outperforming by 4.05. And that's since this record keeping began in 06. Okay. Here we are as of August. Look at this, guys. Even with this significant drop of this year, we're ahead now by 9%. Now, again, this is just an index. This is not any particular fund, but the math is there. And one of the reasons that the math is there is because using ESG metrics or any kind of screening or analysis is just another component in fundamental analysis by the managers. So it makes a lot of sense that if a company doesn't have to be paying for lawsuits against labor unions, they're more profitable. If a company is not fighting a social media campaign because they sell bullets to teenagers, then they're going to be more profitable, right? So these are some of the metrics that they just make intuitive sense. And when you compare the returns of something like Berkshire Hathaway to the CalPERS fund, the California pension, they have been very similar over the past 2-3 years, where they have both had not great returns this year and amazing returns in 2020 and 2021. So when people say that you will inherently miss out if you use a sustainable fund, the math again is just not there. So look at this one. Here's a year-by-year performance. Even on the downside, I want to draw your attention to 2018, -3 versus -5. Now, some people could say, well, that's probably just because it's going to have more of a large growth tilt, because you're going to have more tech companies because they are generally going to pass a lot of your climate change screeners easier. So let's go back even farther. Here's the last really negative one in 2008. negative 34 for the social index, negative 36.9 for the standard. MSCI USA IMI is just the MSCI version of the S&P 500. I use this because then it's from the same company. So it's a little more apples to apples than the regular S&P 500. So there are, of course, years where the KLD does not outperform. But again, if we go back to just like a long term, it certainly does. So this is something that I feel like creates enough infrastructure research. I don't know what I'm looking for here, like building blocks to say, I mean, it's definitely worth at least looking into. And if your heart kind of leads you this direction, which when polled by Cerulli, which is one of those groups that does a whole bunch of like telephone polls of investors, 56% of women investors, this is part of what they're looking for. And so if you're thinking that like you don't want to buy companies that, you know, put puppies to sleep, then that's pretty much how all of us feel. Like, you know, you don't have to sacrifice return just to get companies that are slightly less bad than average. Because, you know, when we're talking about giant megacorps, none of them are going to be great. I mean, none of them have perfectly clean histories. We're looking for the less bad. Does anybody have questions or thoughts before I move farther on that one? Okay. So here's the fun part. Okay, you're already on this call, right? Like you care. So how do you pick an ESG fund? Well, as I already said, it can be murky. Who decides what ESG is completely undefined. It's non-standardized. It's driving the SEC and the Department of Labor nuts. They are putting out audits on all of the financial advisors that use these types of funds because they don't know what they're looking for either. So they're trying to like create something by measuring whatever it is that we're all doing, which is terrific for those of us that are working on it. But there are screens and there are basics that I would recommend using. So first of all, some resources. Use the screener functions on your investment firm's website of choice. So for example, if you're a Fidelity person, use the Fidelity screener. It's amazing. They've got sustainability metrics there. Vanguard, same thing. E-Trade, probably. I haven't used it, but I'm betting that's there. Watching out for greenwashing is something that we're going to get into here in a second. But generally what I would recommend is, you know, try and just use some of the same metrics that you would use for any fund research. You want to choose lower expense ratios. If you see something over 1%, then there better be a fantastic track record or a fantastic performance record, or they had better be, you know, doing some amazing work in the Amazon, whatever it is. Like they need to justify why their fund is that expensive. And, you know, the actively managed average on expense ratios right now, I believe is 0.82%. So I'm going to pause for a second. Expense ratios, you guys all know what those are probably, but just for anybody who may not, that is the baked in cost of a fund that you don't actually get to see on a day-to-day basis. Okay. So if a fund is trading for $100, then let's say 0.82 is going to go to the company, and that pays for things like keeping their website up, pays their employees, whatever they do. Okay. And so that's why I'm just saying, like, anything over that average, they need to be able to justify. You want to see kind of what are those inception dates. If the fund has a fairly recent inception date, like let's say 2018 or newer, then that's not necessarily a deal breaker, but it could be an indication that this company is following the money. And you want to see, like, what are they actually investing in? Because if you see that, and then you dive in, and this is the list of names, why are they charging extra? This is just any fund, right? So that's one of those things I would say, pay attention to kind of that beginning date. What's the manager turnover? You know, if they had if they have the materials on their website or in the prospectus, then you might see that there was a manager who specialized, like, let's say, in domestic value funds, and then they put a person of color or a woman on the fund in 2019, and now they're labeling themselves as a climate change fund. That's greenwashing right there. So examples, these are the easy, singles that you can look for. Okay. And once again, focus on what's most important to you. So if you see these funds and you see there's, a water fund, but you're really more worried about, you're more worried about sustainable energy, then, don't spend too much time on that water fund, for example. Okay.
Kacie, I have a quick question.
Yeah.
About, I'm sure that you're going to cover this, but my question was about greenwashing. I guess I'm wondering if you have seen, the example I'm thinking of is some fund that's maybe called the Clean Energy Fund. But then if somebody looked under the hood, it's heavy oil and gas, fossil fuel companies still. Do you see that happening frequently, infrequently, ever?
Yes. I do. This is a really good point. And it's one of those things that you're absolutely right. If it's called the Clean Energy Fund, but it's completely invested in Shell and Exxon and a bunch of refineries, what am I actually looking at? The problem there is that sometimes you have to read the prospectus because you have to see why they're invested in a particular fund. And I'm skipping ahead here to the Shell versus Tesla example, because on the face of it, you might think Tesla is a more green company, right? It's ESG. However, Shell in January of 22 made a huge commitment to being carbon neutral by 2050. They actually seem to be putting their money where their mouth is, which is one of the reasons they're underperforming in the last year and a half compared to other oil companies. But it is important to them. And I think that this is one of those things that if they do see that there is, there's going to be an end to natural resources at some point. So if they're willing to move forward towards these other types of energy, then that's really interesting. But with Tesla, for example, they are going to be, of course, good on that environmental edge, maybe, but a lot of the components in their batteries are very rare minerals. They're not great with workers, racial discrimination, harassment lawsuits. Elon Musk himself, this is one of those things that, unfortunately, yes, you do have to read the prospectus to see why they're invested in something in particular. And then one of the ways that I personally have kind of outsourced my concerns about greenwashing is by choosing some of those companies that we talked about that are older and have a stronger track record. Your Calverts, your Parnassus, your Pax World Funds, etc. You're going to pay a little bit more than rock bottom Vanguard prices, but at least somebody else is worrying about this and I don't have to. So those are some of the ways that I've found to be concerned about these things, but not necessarily have to do all the due diligence myself.
Okay. Kacie, can I piggyback on that, Kacie? On the Pax funds, Parnassus, Calvert, kind of the funds that have been around for a long time. I think as an individual investor too, those types of funds have been doing this type of screening for a long time, which is valuable in and of itself. And I think for investors, if you go to their website and read the fund materials, the management will lead you through the process they use in pretty clear-cut ways, right? So while one fund might exclude all fossil fuels for reason A, they'll give you the reason. And if a comparable green fund does not exclude for whatever reason, they'll tell you the process that they use. Whereas with a lot of index tracking funds or some of the new ETFs that are out, they're not super clear on their methodology. So you're kind of guessing. So just like another reason to look at some of those fund families that have been doing this for a really long time.
Yeah, that's a good point. Chris, did you have a question?
Yeah, like do the bigger companies now have like index funds that are devoted to like say clean energy, or and how come they don't? That seems like that would be really easy to do.
They do.
They do, okay.
Yeah.
Do those do well?
They do. They definitely hold their own in this space. So BlackRock, man, you guys are so good at teeing me up. BlackRock, this guy on the right is Larry Fink. The guy on the left is Warren Buffett, or everyone's American grandpa. Can you smell the Werthers in his pockets? I feel like he is everybody's grandpa. But anyway, so this is one of those like fights for the ages. Larry Fink is the leader over at BlackRock. They are the largest fund company in the world, and he has made a lot of commitment to sustainability, and added it as a metric to not only their sustainable funds, but all of their funds. So even if those funds don't necessarily have a good rating, they're throwing it on the label. The same way that, you know, if you go to McDonald's, they'll tell you how much that quarter pounder has in calories. It's not great news, but at least you've got the info, right? They do have a terrific sleeve of sustainable or climate change focused index funds. But once again, they are going to simply be screening out for fossil fuels, which is one of the reasons that Glenn Hager from the state of Texas is unhappy with them. And they're going to be screening out for some other basics. So that's going to be nuclear energy. I believe it's alcohol, tobacco, firearms, a few other like basics that they're going to screen out. They're not going to be doing any active choices unless it's a sector fund. So if it is specifically an energy fund, then they're probably going to have only energy companies. If it's a healthcare fund, only healthcare, et cetera, right? But in general, they don't truly like do a deep dive on the fundamentals of a particular company and say, ooh, I think this is the one. So if that helps. Yeah, BlackRock's great. Vanguard's great. iShares probably, well, iShares is BlackRock. Who am I thinking of? Spider funds. You know, they all have these now. So yes, that's a wonderful place to start. And the expense ratios are rock bottom. So they're really good. Okay. So Warren Buffett refuses to provide transparent information to BlackRock. Berkshire Hathaway is a black box. He won't tell them how he chooses or what's in it. This is one of the things that I am excited about, the growth of the investable space, because the more we as consumers are telling companies we want to see the numbers, the more they're actually going to put them out there. Okay. And so that's one of the things that, for all of the mixed emotions we might have about BlackRock and Larry Fink, the push is going the right direction, or directionally correct, as everybody's boss says these days, right? So I really like that as a way to make these things a little easier. Now, to be fair, BlackRock in 2020 gained $171 billion of new fund flow, partially because of all of this. Like, what do they say? There's no bad press, right? So like certain European countries are banning BlackRock because this is one of their things. Texas, et cetera, but they are moving the needle for different companies and they're getting the word out. So although it may not be perfect, then it's still going the right direction. So these are things that we want to continue to see. Okay. Kind of like you're saying, all of these different companies, do they offer these things? To me, this is true no matter what kind of fund selection you're doing. Frankly, it's like something we should all have tattooed on our arms, that perfect is the enemy of good. Like, there's going to be good enough choices. And these are, everything that I'm looking at least, these are all liquid funds. None of these are private placements or anything that you have a huge lockup period. If you don't like this fund, you get out of it and buy something else, right? So just getting yourself into the pool, I think, is one of the biggest like initial challenges. And once you've had a particular fund for a while, it's less of a shock to the system to switch out from your maybe Vanguard or BlackRock basic fund and choose, let's say, maybe a Calvert fund, or, pick your poison kind of a thing. But like we were saying, how do you do that research? So you look for the convention, even if you don't find something that really speaks to exactly what you're looking for. So for example, I have a client that wanted to invest in companies that create textiles or clothes, but do not use fast fashion or any other, like they have better labor practices than average. I can't currently find that, okay? That's just not something that has yet been boxed up and put out there as a fund. So if you are looking at conventional funds, then you want to consider their ESG factors by reading their prospectus. Has anybody ever read a prospectus, like a whole 120-page prospectus? No one has. Guys, like I say, this is what Control F was meant for. You screen through that prospectus looking for the relevant pieces. There's always, of course, a little chapter or table of contents at the beginning. Just find the parts that you care about. Like, nobody actually wants to read those things. Morningstar has sustainability ratings. MSCI has good websites that you can look at. But Morningstar is one of those that we all have kind of agreed is a gold standard. It's like the good housekeeping seal. So if they have a couple funds that you're interested in, and you see that they have 4 or 5 of their globes, sometimes they will even have a little summary of how they're measuring and what they like about that particular fund. I think those can be very useful, again, for those of us who are doing research and it's not our day job. Like, who has time for full-on investment research? This is something that you kind of have to set an alarm on your phone, look at it for an hour, and then pick one, because we can all just spin out forever with analysis paralysis. Okay, so like Gwen was saying, the top 10 constituents can be very similar. You're going to screen out nuclear power, tobacco, alcohol, gambling, military weapons, adult entertainment. Those are normally kind of the things that are screened out if you're just picking a standard like index ESG fund. And then screening in is kind of where it goes up a level. They're also going to look for things like controversies, the negative impact of a particular company. So one of the examples there is, what year was that? Sadly, there's been too many school shootings for me to remember, but the Parkland shooting in Florida, Dick's Sporting Goods was in the center of that controversy because they sold the gun and the bullets to a minor who committed that particular shooting. And within I think 12 days, they had changed their policies and completely removed all of those issues from their inventory or their stock. But they had a controversy, right? So those are examples of companies that might be excluded because of a particular controversy or things that are ongoing. Business involvement in unsavory practices, if they are sanctioned in certain countries. So for example, maybe one of these oil companies, or maybe a cell phone company that's getting their battery ore from interior Africa, they may not have the best labor practices. So those are the kinds of things that it takes a lot of research to do, because these fund companies, they're holding upwards of 100 names sometimes. And for all of us as individuals to do the deep dive research on all of those different names, sometimes that's just a little more than we have time for. So we go back to letting the managers do that work for us. And if we have a huge commitment to particular topics, paying a little bit extra for managers that are doing the deeper dives and the shareholder advocacy. Okay. Thoughts, questions before I move on from this one? All righty. I'm hoping that this is just because you all so much agree with me rather than everybody has tuned out. But So the Shell and Tesla example, we kind of talked about this earlier. This is one of those that can be so confusing and so murky, and was one of the reasons that the regulators are having a hard time measuring everything. I won't go through this because we already kind of went through it. But we're going to get into my absolute favorite part of sustainable investing, which is the impact that you can have as an individual. And honestly, this is one of the things that the comment section on the Wall Street Journal went bananas about when I was reading that article about the California pension system, because they're like so unhappy that woke culture is stealing their pension fund. I don't know what they're worried about. But the point is, impact investing in shareholder advocacy. Shareholder advocacy is kind of like the available version of impact investing. So a lot of these funds, sometimes you have to be an accredited investor, which means you have to have over $1 million of net worth or an income over 250,000, by the way, or you have to be investing in separately managed accounts, any of these things that are like harder to get to. But if you just choose some of these funds that have shareholder advocacy, again, some of your Calvert Community and Reinvestment Fund, the Parnassus funds, the Pax funds, the Nuveen actually has some nice ones, et cetera, et cetera. One of the things that those managers are going to do for us is that they appoint the board of directors at a shareholders meeting. Well, not the managers, but they go to the shareholders meetings where those people are elected, the executive compensation, they have thoughts and opinions about all of these different things. And when they go to those annual general meetings of the company, not only are they there asking questions as a fund manager, but they are bringing with them the power of all of us as the shareholders in their fund, because they are voting proxy for all of us. If we have not elected to vote for that particular company's annual shareholder meeting, then the managers can vote proxy for us. And by doing that, they can advocate for certain issues that they want to see addressed. Or they can say, you know, this particular board of directors is made up of Larry, Daryl, and his cousin Daryl. We'd love to see somebody else on this board. We want to see some different resources and some different points of view brought to the table. If you want to vote on these things yourself, you can absolutely do so. And you can do that by mailing in your vote before the general meeting. Sometimes you can even vote online, which is nice, but you have to do the research, like what are they actually voting on? And then during the meetings, they will like have an opportunity to bring new business to the board. And so that's where you see things like the example of, gosh, who was it? Let's just say it was Parnassus, because now I can't remember. But let's say Parnassus goes to the Dr. Pepper shareholders meeting and it's held in Waco and nobody else went. And so while they were there, they're like, hey, we want to see less pollution at your bottling plants. And they had a long time to have a good conversation, and they actually were able to move the needle on the water that they use in the bottling plants and how they are repurposing that water before it goes back out into, you know, our ecosystem. So these are things that they can push for, and they can even do the research. And then sometimes they work together, because this is really neat too. Sometimes they're kind of like working together through aggregator, like research companies that will say, you know, Parnassus, Pax cares about this too. Have you guys talked to Calvert? Like, it's a small enough universe that sometimes they can all work together and see if they can make change happen. So that's really interesting. And one of the ways that I kind of feel like this is worth doing, if these are things that you care about, and if you're, you know, giving money to different places, like, why not do this too? So here are two actual examples from two different funds that I think are interesting. So Green Century Funds invest in green futures, right? Duh. To curb climate change, they are working to reduce deforestation by palm oil. If you get on their website, there is an adorable picture of an orangutan, a baby orangutan. Like, how cute can you get? And they can talk a little bit about what their efforts have done. So Wilmar International is the largest palm oil trader. Palm oil's in all of our peanut butter and a bunch of other stuff. And so they were actually able to secure a zero deforestation commitment, which probably means that they're replanting trees, they're not going to stop harvesting palm oil, but by doing so, they're making a significant difference, not only in the future of the orangutan, but also in the ecosystem of some of these countries where there's not as much economic opportunity, let's say. And so they really need this business. And by making sure that the business continues to happen, the people continue to have jobs, but also maybe we can compromise and make sure that we don't completely, destroy all of the forests of Sumatra before like 2030, right? Community Capital Management is a bond company that I think is absolutely fascinating. They do a lot of work with affordable housing in underserved communities. And on their website, like Sarah was saying earlier, a lot of these companies, because they are charging a little bit extra, they also put out more marketing materials because they want you to know what they're actually doing with our money. And so these are some examples of the investments that these two companies have done. So with CCM, this is about the 7th Street apartments in Washington, D.C., and how they are providing job placement training at the apartment communities, which I think is so interesting. Things like more sidewalks and civic involvement at that particular community, early education work. So some of this is kind of the same work that around here you might see at foundation communities kind of stuff, but it also uses outside investment to build these properties. And so that's where us as general investors can come in. So there's a few different bond funds that are doing this. It's not all equities. There are some bond companies that you can use. Other resources that I would recommend when you are trying to begin research on sustainable or ESG funds, Green Money is a newsletter that you can subscribe to. They have some really great information. They put out little videos. Everybody in marketing I talk to says that videos are where it's at, but I also love a 2-paragraph summary. Morningstar, of course, has lots of information, really good stuff. They actually have like a whole carved out website now with ESG information that I really like. And then again, whatever fund company is your investment vehicle of choice. So I was, if we have too much time and nobody has questions, I was thinking maybe we could look at like the Fidelity screeners or the Vanguard screeners, anything like that, Schwab, of course, and we can dig into those. So the only thing I want to leave you with is, we are all cynical investors. We know what we're doing, and sustainability is just another quantitative metric to measure companies against, but it's worth doing and it's worth continuing to do, because if we can make any change in this direction, then it's going the right way. So all of the different cliches I can think of are wrapped up in this one adorable picture, not only of that make-believe kid, but my actual 2 kiddos. So I didn't purposely pose them on the beach for this reason, but I will definitely use it and exploit them because they are very cute. And I want their future to look as rosy as possible, from air they can breathe and job opportunities that will not be outrageous for them. So that's the end of my prepared remarks. Questions, thoughts? Anybody want to see website screeners? Anything I can do for you guys?
I think just to add my voice as a millennial to the discussion, I have a lot of friends who are very, very idealistic, kind of like feel like it's a double-edged sword in terms of trying to imagine the future. Will we have enough for retirement? But should I sacrifice my values in order to make sure that my retirement is comfortable? So it feels like a little bit, I think that that dilemma keeps a lot of people my age from like even entering into the stock market. Seeing those charts though, where it shows that, ESG funds do, they're on par, if not outperforming, some of these really common indexes. It's helpful to know that, it feels validating that it's not necessarily a trade-off that you have to make, having to sacrifice your values so that you can have money for the future.
Yeah, exactly. Thank you, Gwen. And of course, I mean, none of us are Pollyanna about this. Like, we know that these companies are not perfect. We know that. But yes, if this is one of those things, what a wonderful additional benefit. If this is what it takes to get people, millennials are like 40 now, by the way. So like, get people in their 30s to think about investing and be more excited about investing, then I am into it. The biggest component of my sample set or data set or whatever you would call it of people who are investing in sustainable funds are women over 50 who are the head of their own household. Now that might be because they are single by choice or they are a female only household for whatever reason, but they are the ones that not only are my personal data set, but also have been the ones pushing all of these companies since the 80s to really get this out there. And yeah, people under 40, they care about these things. I know we've all seen those memes, like the "this is fine" guy, where he's sitting in the fire. Has anybody seen that one? I can't remember the name of it, but my point is, a lot of young people are not investing because they're like, the world will be exploded by the time I retire. Okay, but what if it's not? Then what, right? So this is one of those ways that hopefully we can slow down the world exploding, but also provide for your own retirement by socking some dollars away.
Can
I
we
think
see
it would
some
be
screens?
Oh, sorry. I was going to say that I really think, Kacie, it would be really awesome to show people how they can figure this out for themselves, right? Like you said, like so much of ESG is kind of personal, putting your values in place, like how, like click, 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 from a click, click, click perspective. What are some tools that they can use to get started? I think that would be awesome if you could walk us through that.
I would love to. Okay, so let me show you my window here. I don't know exactly how to do this. One moment. Oh, tab. Excellent. Okay, so I can show you. I'm hoping everybody's seeing the Morningstar tab. Is that correct? Right?
Not yet. It's coming up.
Oh, there we go.
Okay.
It's loaded for me.
Hopefully slowly. Okay, cool. Yeah, for some reason there's an enormous advertisement, so we will hide that. So scrolling down. The cool thing is, like, this is just morningstar.com. You don't have to have a password or anything, but here in this top menu, sustainable investing is like one of their main menus that you can choose. So when you dig into that one, there's some articles that you can read. And then down here, where is it? Articles. Plastic is everywhere. That's disappointing. You can find individual funds and look them up. Is that fun or what? So for example, let's look at a Vanguard fund, the Total International Stock Fund, for example. And then if you were to look at this, hopefully it pops up here soon for everybody. You can see the defense and military, the values base. So there's like 0.46 in gambling, really 2.27s in alcohol, which makes sense. I would imagine that's Ambev, whatever, that company that bought Bud Light, whatever that South African company is that bought everybody's beer. And then the screener, like you can take a deeper dive. And here in the ESG screener, hopefully this is still showing for everybody. There are multiple things here at the top that you can look for. Here's the Morningstar ratings, the low carbon designation. Here's the little globes that they were talking about, and you can sort by these different things, or over on the left, you can filter for them. So for example, if you're looking for a 5-star, they're probably going to have some names like sustainable equity or good steward, whatever, right? But once you put this stuff in, then you can maybe pick one like this one has a yield of 4.8. So that's really interesting. I want to learn more about that. So let's look at that company. And so we pick up that ticker symbol and we just dive into it and let's see what it looks like. Cautious allocation, fascinating. Let's look at their information. Sustainability scores. They do not have a sustainability investment by prospectus, which is fine. They don't have to. Sometimes they avoid that because this is not their primary point, or they don't want to do the regulatory work for it. Fine. As long as they're getting the work done, who cares? And here's their returns. -15 as a U.S. fund this year. S&P's down 20. Portfolio itself, what's it in? It's large cap value. To a pretty big fund. So this is some interesting stuff. And then on regular Morningstar, if this is a fund that you are really interested in, you could pick up that same ticker from the overview and do a deeper dive into things like what is their internal expense, what's their duration, like how long have they been around, their managers, all of that kind of work. Questions, anybody? Okay. Well, then I will do the same thing, let's say with Fidelity. What just happened? Stop sharing. Okay. Sorry, guys. Share that tab. So the Fidelity website should come up here in a sec for everybody. All right, are you guys seeing Fidelity now? Okay, cool. So this is another one that they're really leaning in because, I mean, it's intuitive, right? Like anything they can do to gather assets to make us invest more, they're going to do it. So as you scroll down, there's some information from that you can, where is it? There's like down here, there's one of those that's just like an easy button for, well, I guess it's not here. News and research, maybe that's where it was. Sustainability is one of the things that you can look for. So let's go here. I'm sorry, it was investment products. My mistake, guys. So here is more information about how you can invest, what they can do, the education resources that they provide. And then there is a screener as well. The industry flows, which we've all covered earlier. The research funds is neat. And this is the thing that I have spent the most time on personally. So this is going to bring up a filter system. So if you're looking for sustainability metrics that are in the Fidelity funds, you know, like the plain vanilla generic Fidelity funds, they're going to pull those up for you here. There's 16 matches. And their screener is really nice too, because it kind of puts performance and expense ratios like kind of all on the same page, which I really like. I think that's a handy way to screen things. If you are looking for a particular fund type, you go down here, you hit the plus sign, then you want, like maybe you want an allocation fund, you want a target date fund, maybe you're looking for a municipal bond fund, whatever it is. Let's go US equity, it's the most basic. Of their Fidelity funds, here's the 3 that they have, for example. here's the expense ratios over here. You can see a broad fund like U.S. sustainability costs you 11 basis points, 0.11 of 1%. If you want a women's leadership fund, you're going to work real hard to get that. That is 0.92%. And a sustainable U.S. equity fund, for some reason, is 3.21 gross. Now, the reason this is just too inside baseball. It's a brand new fund. They're very expensive when they first launch, but as they get more investors, they get cheaper. But I personally am not that interested in a fund with only a 1-year track record. That's a personal choice. Everybody do your own thing. But for example, what's in a women's leadership fund? Let's just see. If this is going to be one of those that I would say falls under that social element, and these are the different companies that they have chosen that they say have a good commitment, I guess, to women's leadership. So what you would say here is, what does this even mean? How is this defined? Our friend Prospectus has a hyperlink. I don't know, did the extra window share, or are we still on the main one?
No, we're still on Fidelity.
So that makes sense, of course. So let me switch that out to the little extra. So this is what popped up for me, was this little prospectus sub window. You could PDF it if you want. You could print it if you want. That sounds awful. I will just go to the regular prospectus and we will say, okay, what even is this thing? And so you can scroll on down and we can see kind of what it says are its investment strategies. 80% of the companies will prioritize and advance leadership. At the time of purchase, include a woman on the member of the senior team, governed by a board with at least a third of female directors. This is depressing. I don't want to keep reading this. And have adopted policies to attract and retain and promote women. It's the year 22, and we're still really excited if a company has one female person on their leadership team. But small steps, right? Okay. So this is the kind of thing that they're looking for. And so these are the ways that they would be reviewing the different holdings. So under their monthly holdings report, here they would provide some of the details about what are they holding, what was the market value, the percentage of the fund, and if there's any cash in the fund at the particular time. 1.6% of cash is exactly what you want to see in an actively managed fund. You don't want to see too much cash. But anyway, so this is the short version. Everybody can dig through these on their own. Sometimes these companies will even provide like quarterly holding by holding information. Those are always kind of neat because you can then see like, well, what is it about Cigna Corp that you think is so female progressive? So those are the kind of metrics that I personally find useful when screening or researching for funds or the funds that I already hold. What about you guys?
Kacie, do you find ever that people use these screeners maybe to look at funds that they have like in their 401ks or like employer-sponsored retirement accounts?
Mm-hmm. Absolutely. Yes. It's one of the best ways to get familiar with the investable universe. This is Gwen. Thank you so much. So if you don't really have investments outside of your 401k and are feeling some of that analysis paralysis, if you actually already have investments because they're in your 401k, researching those investments is a terrific way to get more familiar with these websites, to like research a bunch of different funds and see what are the themes that are being repeated, and if they are funds that you personally would choose if you could get away from those menus. And so that's something that sometimes the menus at your 401k company are huge and you can choose anything you want, or you can do the opt-out and like pick from the whole investable universe. but sometimes they're really limited. So if you don't have a whole lot of choices, then you kind of got to just pick what's the best of a bad situation and take what you can, and then invest outside the fund. But yeah, absolutely doing some research, because I mean, so many of us, we're not real sure what exactly, when we say, I do want an international fund and there's only one choice, then you have to go Google it somewhere, like what's First Eagle, you know, whatever it is.
Does anybody have any questions or anything you want to just like talk over?
Quick question. This thing that Hagar guy did about investing, about penalizing companies that don't invest in petrol, could that affect you in Texas? Like, what if they say, well, I don't know, could they do something like that and prevent you from investing in these kind of funds? Or
not as an individual, because he cannot control like their ability to do business in the state, like for you and me investing in those companies. What he can stop them from doing is investing like TRS dollars or being offered on the 401k menu at University of Texas or the state of Texas or any other government body. So that could impact the returns of those funds, you know, if they were abruptly removed and then had to liquidate assets to meet cash calls. That certainly would impact returns of those funds in a very short term time frame. But I don't think that he has the power to stop any of us who are just Texas citizens from investing in these companies. And the research that I've been reading about his ability to get it over the finish line on any of his stuff is very mixed. I don't think that he'll actually be able to ban BlackRock, for example. Now, he might be able to get them to not do a fossil fuel free fund, but I think that it's going to be an uphill battle. It's really more for the media attention, from what I can gather. It's gotten lots, so good job him. All right. Okay, so last question is, who already has at least some sustainable funds in their portfolio? Betsy, Megan, Gwen, Kacie. Okay, so who has been convinced? Anybody? I'm going to switch over. Lori, yay! Okay. So Lori, what do you think you'll do first? Do you think you'll do just like a regular index fund, or you want to jump all the way in?
And I like the idea of, well, I guess I'm worried about climate change and wanting to know like what I can do for it. And so that would be one way to support it if I found a fund that was supporting climate change.
Yeah.
Yeah. So I kind of wonder along those lines, like what you think about all the electric cars lately. There's like a
I know
huge
they're still using the grid, right?
in electric cars right now. And what do you think about that?
I think that electric cars still need electricity. So, but in the long term, I think it'll be a lot easier to find alternative ways to fuel them. But this is a great example. So if climate change is your particular concern, so then you come into another decision tree on this, right? So is it because, do you want to invest in just no fossil fuels? Do you want to actively choose solar investing, wind investing, all of the above? I mean, there's a lot of different ways to slice that particular pie. And I just encourage everyone to set a timer on how deep your research goes and just like compromise, because there's plenty of really good choices out there that are going to get the job done, move the needle on climate change, indicate all of our preference for not dying a fiery death here in Texas when it's 130 degrees, but also maybe it's not perfect, right? So as the universe continues to refine and the transparency becomes a little easier, I'm hoping that this will become less of an issue. But like I said, with modern portfolio theory, that's a 70-year-old economic theory that won a Nobel Prize, and people are still questioning if it's even relevant to actual investing. So, I think that there's always going to be some controversy and some murkiness in how to define and how to apply some of these metrics.
And Megan, I see that you put electricity and metals and batteries. I like the idea of doing things that are like helper, but not like mainline, something that supports another industry. Is that what you're kind of doing, Megan?
I'm not doing anything fancy right now. I just have one of the social choice funds at TIA CREF, and I'm looking to add more to my portfolio.
Cool. Yeah, that's a really good point, Megan, that we didn't even get into kind of some of the platforms like Betterment and Wealthfront. They both have social choice or socially conscious like sleeves. You could totally set it and forget it if you don't want to dig any deeper. But I will just inform people that those investments are going to be kind of the lowest rung in this like stair step of how involved they are, which again, no problem with that. It certainly is more than zero, but it's one of those things.
On the climate change front, one of the things I've gotten a lot of really cool research coming across my desk is people looking at the impact of the Inflation Reduction Act on the amount of money that is now going to go into green and clean energy initiatives. Because it's my understanding that, in the Inflation Reduction Act, there's billions of dollars earmarked for solving issues connected with climate change, right? How do we electrify the country? How do we produce that electricity sustainably? How do we source the rare earth metals and things that, now come from places where they do not have a great humanitarian record? How do we either source those or find alternatives? So, I think that that is just starting to be explored, and having all of this money being kind of diverted to that space means that ESG investing is evolving really quickly. And, the investment or the Inflation Reduction Act kind of flew under the radar a little bit, right? There's a lot going on this year. But if you kind of dig in or get a chance to read articles about how that money is being earmarked, there is a ton of opportunity. And maybe it's not available in the public markets yet, but I do think that going forward, just whenever you put money and intention into something and incentivize people to solve some of these problems that we have, it makes it an exciting space to invest in.
Yeah, that's a good way to put it.
Is there a fund that, like, in terms of the Inflation Reduction Act, I think there's going to be like a 30%, 30%. If you get solar this year, they'll give you 30% off your taxes next year, tax credit. So if you were to, is there a fund that's purely invests in solar? I mean, you think that would do pretty well.
There are. Absolutely. Yeah. There are plenty of options out there. You can just kind of Google solar investments, and yes, there's wind farms, there's solar.
TAN is maybe the most famous one because of its clever ticker symbol.
It is fun.
TAN what is it? Is this ticker symbol for what? For a company or
for a big solar focused exchange traded fund?
Oh, okay.
Yeah. So we got some time here. You want me to just dig into it?
Sure.
For example, TAN. It's an Invesco fund. It's a solar ETF. And you guys probably have already are familiar with kind of some of these basics that you're looking for on these websites. But you see immediately everybody's eye goes to the expense ratios, 0.66. It's below average, not much, but not bad. And then kind of like, how old is it? That's one of the things we always want to look for. Inception dates, 2008. Sadly, as we all age, that is farther and farther away, which means that that's actually a pretty good inception date, especially for an ETF, an exchange traded fund being around more than 10 years. Good stuff. And then you can come back up here to the top and you can search, like, let's see how their performance has been. So for example, like you say, this is a good year for something like this. Yeah, look at this as from March of 2020 through now, it's had a really nice run up. So returns on the 3-year positive 40. Their benchmark is the US market total return. It's positive 11. Going farther out, same thing. Interesting. Full since inception, -5 still. Wow. What do you think happened in the early days?
There was
That's a
that
real
period of
stinker.
time when China undercut all of the other solar manufacturing facilities, and the company they couldn't generate a profit. So there were a couple of years, I think, early on where that dynamic of competition in China, just none of these companies were able to be profitable. But as the industry has matured over time,
It's just getting better and better.
Mhm.
Well, and the other thing too, Sarah, that you may have noticed as well is like this huge negative return for this year. It's really eating into a lot of people's since inception returns, because it's just such a huge number. So not that I don't know, excuses negative performance since inception, but it is one of those things that if you just do the math and throw like a positive 20 on it, then you might see it come back to the average. So anyway, those are kind of things to look for. But yeah, solar funds, TAN. TAN. And then also whenever you look at stuff like that on Fidelity or Schwab, sometimes they'll also throw up other alternatives. They're like, hey, if you like TAN, you might like chocolate milk or whatever.
I was just curious to see if there was a dairy-free index fund. There are 2 vegan funds, plant-based innovation ETFs.
Yeah, that makes sense to me too. And then, some of the work that Kathy Wood is doing with like future funds at ARK Investments, those are kind of interesting. A lot of those don't have truly a sustainable focus, but they're like, I don't know, it seems a little bit like all of these bazillionaires who are concerned about going to space. Like she's also focused on the future, but in more pragmatic ways, in my opinion. Like, let's make sure we figure out desalinization, right? I don't know if we all need to go to space, but clean water would be great. So, stuff like that. Well, thanks everybody. I appreciate your time today. Anything else that we can address or answer, or anybody else have thoughts they want to contribute?
Out of curiosity,
Yeah.
there's these socially conscious funds. Are there funds that are purely for like debauchery and like that
Yes.
are choosing petrol and pornography and I don't know, guns and everything? Is that such a thing?
Yes. So there have always been companies that are funds that have focused on, the sin industries, but recently they're also kind of rewrapping themselves as like they use the name MAGA funds, which is so interesting. But yes, they're out there. You can certainly invest in those too.
Yeah, there is this trend of politically skewed funds on both sides, right? Where there was a new one with the ticker symbol KRUZ for Ted Cruz. That's conservative leaning, and there's one ticker symbol. Oh man, what is it? It's some version of Nancy Pelosi's name. It's some version of Nancy, Maybe it's NANC for more progressive firms. So people are taking this ETF thing, like they're taking it pretty far, right? And you can find these little niche ETFs for so many things. I don't know if dairy free, Gwen, but certainly like a lot of people have a lot of ideas on how to take the universe of stocks and chop them up into these categories and slap like a clever ticker symbol on them. So it's interesting.
Cruise is not yet available at Fidelity. I just tried to pull it up. So maybe it's a penny stock. Well, it's a pleasure, everybody. Thank you for your time today. I'll turn it back over to the AWIG executive team.
Thank you so much, Kacie. That was great. And I really liked being able to go over the stuff on Fidelity with you and Morningstar. I thought that was really helpful.
You are very welcome. Thanks to everybody for joining us today.
We'll see you guys next month. I don't know what the topic is. I think it's TBD.
TBD. We'll let you know when we know. If anyone wants to volunteer to run the October meeting, we're still open, but we also have people lined up to get on the schedule. So we will let you know as soon as we get it all solidified.
Awesome.
Thanks, everybody.
Thanks, everybody. Have a great weekend.